Hi, everybody. This is Camille Marotta from Homebridge. We're going to do a FHA renovation program today. And several of the points that I want to go over with you is you can have great success with this program if you utilize it for houses that are not exactly what the customer wants. Let's say you're walking into a house and it's dated. You can always offer them the renovation program and ask them if they want to finance the renovations rather than go to Home Depot or have to worry about doing their upgrades after the fact. When I go through the program, there's going to be one point at which I'm going to be able to show you that it's going to be pennies a day for them to do the renovation program. So it's always a good idea when you're thinking about doing your listings, you have to be able to put in there something that's going to give you, give them the understanding that there may be some, hi, thank you, that we got some new visitors. Here's your packages. There's food in the back. Excuse me for a second. Yeah. I'm back. So, one of the things that I want you to remember about renovation loans is that there are extremely a lot of moving parts. And I don't want you to get confused. It's just like a regular sale. You're doing exactly the same thing you would when you write up your contract as if they were purchasing the property as is. The fact that the property is going to require renovations or the customer would like renovations is the difference between where we put them in the program. So Mr. and Mrs. Smith come out and they say, gee, I like this house, but it's being sold as is. What do I do? You're gonna, if they make an offer on the house, let's say it's $100,000, that's exactly what you're gonna write your contract for. It's gonna be $100,000. The fact that they're gonna be doing a renovation loan has nothing to do with you. Your contract is normal. If they're purchasing it as is, obviously you have to put, it's gotta be as is in the contract. But what I do on my end is then I will calculate according to what they want and according to their budget, how much renovations they're going to need. And then we add the two of them together, the cost of the house plus the cost of the renovations. And then that's going to be their budget. But that's going to be on their mortgage side, not on the real estate side. On the real estate side, you're doing everything as you do, as you normally would. I only suggest one thing. When you're doing a renovation loan, give yourself a 45-day closing date. Don't make it 30 days. Make sure that it's 45. So we have the package in front of us, and I want to go through the package. So today we're going to do 203Ks. Now, 203Ks have a sister called a Fannie Mae Home Style, and it's very similar to the same product. It's just the conventional portion. This is an FHA portion. They're going to have mortgage insurance. It's going to be for primary residences only. It's going to go through Fannie Mae, or I'm sorry, FHA underwriting guidelines. And the minimum that they're required to put down is 3.5%, just like you would with a regular FHA loan. However, if they're purchasing the house for $100,000 and their renovations are $40,000, their deposit of 3.5% is based on $140,000 because they're doing the renovations. Cash out refinances are not allowed. So if they're buying the house or they're renovating the house and they think they're going to be getting money back at the closing, there is no money back at the closing. High balance loans are accepted. High balance are whatever the county's high balance. I mean, I've had renovation loans up to $763,000. You don't have to worry that you can't do it on, it's not just the little houses that you're going to be working on. You could do it on big houses as well. Contractor has to be licensed and insured and is required by state regulations. The contractor has to submit itemized bills to the desired repairs and the improvements. So when you sell the house and it's $100,000, they're going to go to Joe Smith contractor, and Joe Smith contractor is going to come in and he's going to say, well, you need, this and this, and the total's about $40,000. I'm going to need bids to show that the repairs are $40,000. That's how we're going to estimate what our budget is going to be. The other thing that, hi, how are you? Just a second, guys. Kathy, you came, if anybody's hungry, there's sandwiches in the back.
Thank you.
What is most important is that FHA 203Ks and Fannie Mae Home Styles, which is the conventional sister to the 203K, require, if the repairs are over $30,000, they require what's known as a HUD consultant to be on the project to come out and assess what they're going to be doing with the repairs. So the HUD consultant is basically the eyes and ears of the customer, because he's looking to see, he's the one that's going to come out, make the assessment. Yes, your repair budget is correct. He might say, hey, no, you know what? I don't think you put enough in for heating and air conditioning. You need to make a correction. Their numbers have to jive. He comes out, he does his evaluation. There is a cost to the borrower for doing it. It has to be done upfront. And FHA has a very specific guideline of the cost for the renovation. So if the renovation is like $45,000, the cost could be $400. If it's between this and that, the cost is, so the maximum cost it normally is $1,000 if the repairs are over $100,000. That's not something that you have to worry about. That's something that I'm going to explain to the customer. Okay, the borrower cannot have a direct relationship with the contractor. Can't be mother, brother, sister, uncle. Does not work. They have a different name, and I can utilize that as not having been a family relation, then it's possible for it to be used. So the contractors have to have, the bids have to be itemized for both the materials and for the labor. Now, I think all of you understand that the cost of the materials has gone up dramatically. So we want to make sure that whatever the bid is, we have enough money to complete the project. Because the last thing I want to happen is the guy goes, whoops, open the wall, and he found out that there was additional work that needed to be done. In that case, what we're going to do is give him, and we're going to give him a contingency reserve. So if their repairs are $40,000, we're going to ask for, depending on the HUD consultant's report, he's going to determine whether he wants a contingency reserve of 10% or 15%. 10% is usually normal, 15% is if he feels that the project is going to warrant it. But that's going to be given to me in his calculations when he hands me his report. So when somebody meets with the HUD consultant, I suggest that the agent be there. the contractor be there, and the HUD consultant be there. So this way, everybody's on the same page. And if the owner wants to be there, that's a wonderful situation too, because they know exactly what's going on. Okay, so the contractor, again, I'm going to stress this, the contractor's bid has got to match whatever the HUD consultant has on his report, because that's how we're going to determine his after improved value. I want to talk about value. So you're probably saying to me, we're going to need an appraisal. There is what's known as an as-built. What is the condition of the property today as you're going to purchase it for the purchase price you're putting out there? And what is what's going to be the value of the property once the house is renovated? So the appraisal that's going to be sent out, the appraiser is going to be looking at two things. He's going to be looking at the listing, and he's going to have a copy of the HUD consultant's report with the repairs. And that's how he's going to make the determination of how much the house is worth after the fact. If the house does not appraise, then we're going to have to make some corrections or change the situation up. But normally, whatever the HUD consultant says, that plus the contingency reserve, that appraisal is going to show that. Now, if you know that we're in a very depressed area and this is going to be the best house on the block, I suggest that you have a lot of comps with you to support what the house is going to look like after it's completed. Okay, luxury items are not allowed. Gold toilets. Funny, I know, but okay. So there's two FHAs, two FHA reports. We're either going to do a baby K, which is when your renovations are under $30,000, or you're going to do a standard K when the renovations are over $30,000. Standard K is designed for more complicated projects, and many times it's going to require plans and specs to be able to get the project done. Now, if I'm going to stress this, and I've heard numerous questions about this. If a house has been destroyed and there is no longer a foundation in the ground, that is new construction, that is not renovation. If the house needs to be raised, that's fine, that's renovation. So there's a difference between new construction. New construction is dirt. We're starting from dirt up. If it's renovation and the house got destroyed and it has to be taken off of its existing foundation, that's a renovation loan. So during Sandy, we did numerous renovation loans because of the fact that a lot of the foundations were wobbly and they slipped off the foundation, or there was damage because of the water, and we know that it was there. Now, they're going to check. And if the house came off its foundation, or it's not been there, or the house has been taken down and the foundation and the four corners are still there, they're going to make sure that those four corners, there was a house there before. So if there was never a house on the property, if somebody's trying to say that it's a renovation loan, that doesn't fly. Okay, they allow up to 3 licensed contractors. So you've got your main contractor, so you maybe need another guy who's heating and air conditioning. You need another guy who's an electrician. That's going to be all in the HUD consultant's report. This says help self options require HUD feasibility study. If the contractor, if you are in the trades and you want to get somebody who's says, I'm a licensed electrician, I want to do my own work, we have to do a feasibility study to make sure that he's going to be able to do his own work. So that's called self-help. So self-help is when you're doing the work yourself instead of a contractor being being able to do it. But if you're a licensed electrician and you're trying to do framing and air conditioning, that's not gonna fly. We will disperse 50% of the final contractor's bid at the time of closing. So at the time of closing, the one thing that you want to make sure is that the contractor knows exactly what he's going to allow for his material cost. And we're going to give him 50% of that cost up front to be able to start the project. The rest of the project, they have to be able to carry. So in order to have it, if you remember back at Sandy, we had a lot of contractors who would take very large deposits and then all of a sudden they disappear. That's why this program was put in place, to make sure that the money doesn't disappear. So therefore, the contractor is vetted with us to make sure that he's going to be able to utilize his own money to complete the second phase of the project or the third phase of the project. And then once the HUD consultant comes out, he will do the inspections, and that's how the money will be released to the borrowers. You can do a 1 to 2 unit property, and you can take a 4-family and make it a 1-family. You could take a 4-family and make it a 2-family. That's the maximum renovation. So got to put my glasses on. Sorry, guys. Okay. Let's see. The final distribution on the FHA 203K, they're going to hold back 10% on every draw that the contractor is getting. So if, let's say the contractor completed $20,000 worth of work, they're going to hold back 10% of that in and wait until the borrower gets the CO on the property. And that's also to make sure that the work is done and it's completed in place. We put so many, I mean, FHA puts so many hard stops on things and so many safety nets, but it's designed to actually assist the borrower in making sure that the work gets done. We're not trying to be bullies. We're trying to make sure that the contractor's doing his job in a timely fashion. Now, just right here in Barnegat, I've had a gentleman who blew through 3 contractors because the contractors weren't showing up or they weren't doing anything. It was a nightmare. And I'm really not sure that he's still finished with the project, but we'll get that done. The limited or the baby K does not need a HUD consultant. The borrower work with the contractors receives the bid, requires the work. HUD does not approve the contractors. It's the lender's responsibility to do that. So the contractor is going to have general liability insurance. He's going to have his builder's license, and he's going to have proof that he's done renovations before. He can't be, Mr. Toolbox. He's not a handyman. There is 2 draws for a baby K, which is really none of your, you don't have to worry about the draws. Once the project is closed, and the nice part about this is you're not involved in this process. You get paid at time of closing. So after the closing happens, you're immediately out of it. You got, all you need to do is follow up with your customer and make sure that they're happy during the construction. But as a real estate agent, you get paid right at the time of closing. So you're literally out of the deal. The construction starts. One of the things that I really have found to be a great advantage, and I'd really like you to put this in the back of your head. If somebody wants to rent, if somebody is saying, well, the house needs upgrades and I'm not really sure, I don't know how I'm going to be able to afford this. It is cheaper for them to do a renovation loan and put the renovation into the project than it is for them to do it out of pocket. And I'm going to give you an example. for every $10,000 that they need to finance for a renovation loan, it's going to change their mortgage payment by $43 for every $10,000. So if somebody doesn't want to buy a house because they think that it needs renovation work and it needs $10,000 worth of work, my suggestion to you would say, it's another $43 a month. Divided by 30, what do you get? $1.50 a day? For $1.50 a day, you're not going to buy this house and do some renovations. So if you break it down into the simplest terms for them, or I will, let me do it. I will explain to them, listen, these are the renovations you need. This is the work you want to get done. For $20,000, it's going to change your mortgage payment. $43 times 2, really? So you probably lose that money at Wawa going for a cappuccino or buying a pack of cigarettes. It's cheaper to do your renovations through a renovation loan than it is to do it after the fact and then save up for the renovations. Now, if the house is not habitable when they go to buy it, let's say that they can't get a C of O, it's in horrible shape, and they can't live there, we can close on the loan and take 6 mortgage payments and finance it into the loan so that they don't have to rent and make a mortgage payment, which is great. So that if the house cannot get a C of O for whatever reason, we can, and it's not habitable, they can't live there, we can finance their mortgage payments into the mortgage to make sure that they're going to be fine and they're not going to be double banged on the cost of the paying rent and having to worry about making a mortgage payment too. So if they think it's going to be 3 months between it's habitable, we can build in 3 months. It depends on what they feel that the timeline is to be able to get the C of O to move into the house, start the work. I'm going to skip over this a little bit. Okay, the minimum cost of repairs is $5,000. Now, $5,000, they can cover, they could do carpeting, painting. It doesn't have to be a major structural event. It doesn't necessarily mean that they're going to need a contractor to come in. If they're just going to be doing appliances, painting, contracting, if they just need new appliances, they want to freshen up something and paint it, they want to do little things in the house. If it doesn't need a permit from the town, that's fine. So you don't have to worry about that. They can borrow that money to do the repairs before they move in. So that'll give them a lot of leeway. You can really get these people to do, freshen up their house. It's just going to be a win-win.
Well, these are the things that I was telling you on the phone yesterday. They don't want the house.
Yeah.
To them, saying that when you crack away into your mortgage, I can hook meal and have a
lean on me to explain to them how it's best if they're loving the location, but they hate the house. Or, they hate the inside of the house, or it's got ugly wallpaper or ugly carpets, or they want new floors or whatever it is. If they don't need a licensed contractor and it's not a major event in that situation, we can put it into the mortgage. It's not going to be hard. It's not difficult. We want to make the house the way they want it instead of them doing it after the fact. So they can get money for that. Now they can get, we can do room additions. We can move bearing walls, remodel kitchens and bathrooms, energy efficient appliances, window and door replacements, basement remodeling, mold and lead remediation, well and septic systems, tear down and build a house using the same foundation. Think replace, construct, demolish, raising an existing property to reimburse the flood insurance purposes. So if somebody needs to raise a house and you're going to, it's going to cost them $6,000 a year for flood insurance. Once they raise the house and we get a elevation certificate, I'll hand it over to the insurance guy, and as long as it meets the base flood elevation, he's going to be fine in reducing their flood insurance dramatically. So it's such a good thing. I have a woman who did one and had FEMA insurance. She said to me, I just paid the insurance bill. Now she had FEMA. And I found this extremely interesting because when she was doing her renovation, they told her that the only flood insurance she could get was with FEMA. Her insurance was $13,000. I said to her, okay, something's wrong with this. I need a copy of your base flood elevation certificate, and I need a copy of your insurance policy from FEMA. I sent it over to my insurance guy, who happens to use, there's now FEMA, and then now there's private companies that are doing flood insurance. Her flood insurance turned out to be $787 a year. She had no idea. She just assumed that because she had to have FEMA for the renovation that she had to keep it. That wasn't the case at all. So there's so much that, after I've been doing these 35 years, I don't think that there's a lot that I haven't seen. So here's the process. The borrower selects the property, the lender, and the contractor. We review all the bids, the plans, inspect, and accept the contractor, meaning we get them better. An appraisal is ordered to determine the after improved value. That's by getting the estimates from the contractor. We calculate the loan amount, we underwrite the loan, and we clear the loan for closing. The loan closes. You're done. See you, bye. Renovation work begins. Lenders contact by the contractor each time a draw is required. We're going to order the inspections, including the final inspection. Once we order the inspection, it takes about a week and a half for the contractor to get the money, as long as he's done the work, because we're only paying him for work in place. We're not paying him for something he didn't do. And I can tell you, when the HUD consultants come out and that estimate said that there should be Anderson windows, and there's not Anderson windows, those windows will come out. They won't approve it because it's on the contract. We are giving them the money according to what is in the contract. And then the lender, we're going to release the money to the borrower. If there's any money left over, because you remember you have that contingency reserve in there, you've got two choices. The two choices are, you could apply the money to the principal balance, but it will not change your mortgage payment, or you could do some additional repairs to the house using the money that is left over. So it gives them an option. Most people like to just take it and put it back on the principal. They can't get money back for nothing, so it's got to be utilized. It really boils down to the fact that listing agents can increase the number of showings that they get on a property if they fully disclose, on there what it's eligible for. I have and I'm going to send it to everybody. I have a little script that we suggest that you put in there when you're writing up your MLS listing, and utilizing words like, it could be has the option of being remodeled. There's, we can offer you financing available for upgrades. Things like that, little keywords that you're gonna be able to use to get that. Now, the borrower is gonna get a 30-year loan, or you could get a 15-year loan if he wants. It doesn't make any difference. But you're gonna have more satisfied customers and more referrals. And all you need to do is just show them that you've got the opportunity to be able to improve their house and make it livable the way that they want. It's not hard. I do, I don't know, 30 reno loans a year. And I work with the customers. I know the contractors. I know what's going on in their lives. You're out of it. All you need to do is pop in every now and then and say, hey, how's the construction going? Do you have any friends that you know they're looking to renovate their house or whatever? But it's a great marketing tool. Great marketing tool. Now, again, this is FHA. Its sister is Fannie Mae, almost identical. Their minimum down payment with Fannie Mae is 3%. Their interest rate's probably going to be a little bit higher because Fannie Mae's interest rates are a little bit higher, but it's the same thought. It's the same practice. You're going to renovate the home, whatever conduit we need to use. VA, you can renovate the home with a VA. USDA, you can renovate the home with a USDA. So don't leave your options on the table. Explain to them what it is that you want to get accomplished or what they're looking to get accomplished. As long as you get in their head and find out what they don't like, you can let them sit with me, or you can give me a call, and I can always help you with that. Any questions? I don't even know who's on the call. I'm sorry, everybody. I'm not paying attention to you. Any questions? Yes.
You said that those money left over the renovation it towards other upgrades. So they have to go back to the contractor and consultant to and evaluate the use of.
No, all they really need to do is just get a write-up of what they're going to do with the money. I mean, they're not going to let them put in a basketball court or a pool. So that's not going to be able to happen. But if they want to just do minor upgrades, add some, new screen doors or, touch-ups or whatever. I mean, you got to remember the contingency reserve is only 10 to 15%. So it's not a tremendous amount of money. It's there for the event that, he goes to move a bearing wall and he gets there and the bearing wall is not a bearing wall and he's got major termite infestation. And we need extra money in the budget to repair that. That's what it's there for. It's there in the event that something goes wrong, something we can't see behind the walls. It's it's a beam, a window that's rotting away, something you can't see or there's water damage and mold that you're not seeing when you go in the house and look. Let's put it, we're not home inspectors.
Always.
Yeah. We're not home inspectors. We wear many hats in this business. Many hats you wear in this business, but you're not a home inspector. So once the home inspection comes back and they want to do a renovation loan, and that saves a lot of deals. The home inspection comes back and the people are going, whoa, I'm backing off. I'm not buying this house. That's exactly when you should chime in and say, wait, we can fix this. If this is the house you really love and you went through the trouble of having a home inspection, we can actually work on keeping this house for you and doing a renovation loan. Don't let them walk away as easily as they do. And make sure that you say that to their attorney. Because their attorney, when they send out those letters that regarding the home inspection, it sounds like, death. Really. I get them and I go, really? I saw the home inspection, didn't look that bad to me. But that'll save your deals too.
You provide the contractors. Because I know I've done a couple and I've had to go find the contractors. And if it's just very tedious, certifying them, and I had to go all the way up to Williamstown to find someone to come down here doing it.
FHA does not approve the contractors, the lender does. Yep. So we have a list of lenders. I don't personally recommend lenders because I don't want to be responsible if somebody else is not happy, but I can tell you who does a very good job, and then somebody else can make their decision out on their own. Usually when somebody is doing a renovation loan, they interview, and I always suggest they strongly interview 2 or 3 contractors. And the other thing that I strongly suggest they do in this market is, talk to some other people and make sure that they show up. That's our biggest problem, showing up. And right now, our other problem is that the materials aren't there. You're waiting 6 weeks for a faucet. And you're waiting this long for whatever. This is a 6-month loan. Only the HUD consultant can extend the time frame. And if it's due for a good reason. Let's say he starts the project and we get major snow and we just can't handle what needs to be done outside. Can't fix a cracked foundation if there's 3 feet of snow. Then he can extend the time on the renovation loan. And we will. We always will. Homebridge is the #1 renovation lender in the country. So it's not like we don't do a number. We've got the FHA designation of doing that. And I've been doing them for 35 years.
I think we have a question on Zoom.
Question.
Ray, you have a question?
Ray?
Oh, my apologies. Can you hear me now?
Yes.
Yeah, my question was on the cost. I apologize if I misunderstood or missed that. It was my understanding there's additional fees that go in with a renovation loan. Can you tell me about that versus like just a regular FHA loan?
I can tell you exactly like that. Their HUD consultant fee. And as I said, it is determined by HUD, and I have a fee chart that I will be sending out to everybody. And the only other fees that there are for that is the inspection fees. Depending on the number of inspections, it's probably $125, and then there's title bring down fees. Title bring down fees is a small title search to make sure that none of the contractors have put a mechanic's lien on the property, because if they do, all construction stops. So there's inspection fees, they're usually $125. Title bring downs usually $45, depending on the amount of the construction. And you've got your HUD consultant fee, your contingency reserve, which is really the borrower's money that's going to be in there. And basically, it's really a straightforward loan.
What's the HUD fee? Those other 2 fees you mentioned. What are the range of them?
HUD consultant fee could be as little as $400, depending on the amount of the work, and $1,000 if the work is over $100,000. And that's something that they pay up front to the HUD consultant. It doesn't get paid to Homebridge, gets paid directly to the HUD consultant. The HUD consultant's licensed by HUD, and there is a list of HUD consultants on their FHA website.
So all things considered, you're looking a fee versus a normal loan is like $1,500 to like $2,000 covered over the course of the loan.
Right.
Oh, okay. That's simple enough.
It's not exorbitant because you're doing a renovation loan. No, I think
I always
thought that there was numerous fees involved. No, there isn't. We're collecting this, they're collecting the same amount of money for your taxes and your insurance. Their closing costs are exactly the same, except for the inspection fees, the title bring down, and the HUD consultant fees that's going to be paid out of closing, so it's not even going to show up on the HUD.
Awesome. Thank you.
You're welcome. Any other questions? Unavailable. I work 7 days a week. So you can call me at any time. And, I can always help with a customer if they're in a difficult spot and they don't, you think that they're gonna not do what you want them to do.
I
But
do
it's
actually-
worth it. Go ahead.
Oh, one more question. Do you deal with modular homes at all
Yes,
or
absolutely.
manufactured home?
Yes.
Both of them?
Manufactured homes have, believe it or not, manufactured homes have vehicle identification numbers on them. Because they were brought in on wheels.
Mhm.
So yes, we do modulars. You could raise the home and put a new modular on it. You could take it down. You could do a half a modular. It's not a problem. As long as the modular company is, or the contractor is approved, it's no problem whatsoever. You could even do manufactured housing, which I don't like to say. As long as it's on a permanent foundation. So you can do double wide mobile homes on a permanent foundation. You'd be surprised what little things you can do. There's always a source of doing something. But just remember, the GC can't be a family member, can't be a father, mother, sister. That's important. So again, I'm available. I'm gonna send everybody some more little notes. Christine will be kind enough to tell me who everybody was. And I'll send you some additional information. And next time we're gonna do construction to perm. Building a house from the ground up,
That was my
one-time
question.
closing.
Yeah,
Yep.
that's where a lot of my questions are.
You want to ask them now? I'm here.
I have a listing right now for land. And a couple had the survey done, they had the, plans done up for the sewer, the, septic. They had the blueprints for the house done up and the lot is cleared, ready to go.
Okay. Shovel ready.
I don't know if I'm, I guess, advertising it correctly, like, I just don't know.
Okay, so let me understand this. The seller did all of this.
Yeah,
And they have the plans ready to go and everything is, okay. That is. Who's gonna be building the house? Do you know?
no,
Okay. I'm going to give you. And Jason's waiting to hear this too. I'm gonna tell you how I would do it. I would do this. I would marry that lot up with a builder. And I would have the seller of the land agree to give you, do you have the listing already?
Mhm.
Okay, marry it up with a builder. And once you marry it up with a builder, you can advertise that house as built or to be built on the internet because you've got the rendering. And it'd be a lot easier. And I can show you on my cell phone, one of their agents in Little Lake Harbor, Darlene and Herb Johnson, who I worked with when I worked at Keller Williams PP. We do a lot combination. We bring in a builder that's going to marry it up and put on the signage. Put the sign up there, big sign. The sign was about $400. Let me just tell you, it's a big Keller Williams sign. It's got the builder's information on it. It's got my information on it that says coming soon, and then they got so many phone calls. You would not imagine the amount of traffic you're going to get off of that sign and additional people looking to buy.
okay,
So I'll show it to you afterwards.
okay.
And I
Thank
can
you.
share a copy of that sign with you, but he put the sign up. It looks great. It says coming soon. There's a picture of the house on it. Married it up with the builder. And it was, where's the lot?
It's Egg Harbor Township,
Okay,
yeah, 172 Pine.
Okay,
Great street.
it's a great street. I mean, I have a builder I mean, unless you have a builder, I have a builder you could probably speak to and that, because if she already has the plans, then this way she can tell you what the after cost is because of the plans. Now, they have the plans, but do they have the budget that goes with it? That's what you need.
Okay,
So you need to advertise it that way. Her name is Marta Bravo.
okay.
It's Bravo Builders, and they do a very good job. Or you could use Jason.
Yeah, do you still get the same commission if they use their own building?
Yes,
So no matter what, whoever
Yes.
does it, as long as they're building.
still getting the same commission. Mhm.
You don't really need. Bring your bill.
Right. I would put the renderings up there. But it seems to me that they got so much traffic off of the sign and the builder and the real estate agent got a lot of the phone calls. I got some phone calls inquiring about construction financing. But they got a lot of traffic off that sign. I think it's a great opportunity. I think land sales right now, if you can get land listings, or you don't have to get land listings, I'm gonna make a suggestion. Go out, and I do this all the time. You go out and you find a piece of property that's gonna be that you wanna list. You don't have to list it. You could say to the owner, if I could marry your property up with a builder and you get the price that you want for your property, would you give me the listing if you don't have to pay the commission? And then what happens is the builder pays the commission for the lot. He builds it into his price and it works. No, the builder adds the commission for the sale of the lot into his price to build the house. So the builder's actually paying the landowner for the commission. And the landowner's getting probably just as much money as he wanted for the land. It's perfect win-win. My lot program, I have it in,
When you say marry it up, just for the advertising purposes.
no, you're gonna truly meet with the builder, and the builder's gonna do numerous things for you.
Okay.
They're going to take the plan, in this case, they're gonna take the plans, they're gonna look at the plans, and then they're gonna figure out how much is it really gonna cost to build this house in today's market, so nobody loses money. How much does it cost? And then she's gonna be able to list it as land, and she's gonna be able to list it as coming soon to be built. This way you increase the number of exposures you get on your listing. Now, if the plans and specs were not there, and it was a piece of property that could have been a ranch or a cape or a two-story, then you got the prices of how much it is for the cape and how much it is for the ranch and how much it is for the two-story, then you've got 4 listings on the internet at different price points. And when then somebody's looking for that price point, your property is going to come up. That's how you increase your exposure.
Thank you.
So you can even list it as
That
a
was
mod
so
then
helpful.
too.
What, honey?
You can even list it as a mod then too.
You could
because
list
now
it
you
as-
got 8 different.
Yeah, when you're doing your listing, just do me a favor, let me look at it, okay?
So my other question. Sorry.
Hey, that's what I'm here for.
If the builder that you actually married the land up with, and the client actually goes with that builder,
Mhm.
is it a possibility, do you actually get that, the builder?
You have that listing.
No, you have the land listing
You have the whole thing,
of the whole,
the
okay,
whole thing. You got the
The
whole,
whole
you got the whole ball of wax. You
Okay.
get, if the land's at
That's right.
$200,000
okay,
and the builder's gonna put a $300,000 house up there, your listing's $500,000.
Okay.
Yes.
Oh, wow.
yeah.
Yeah, you're getting paid on the $500,000.
Yeah.
And the other thing that I forgot to tell you is that with a renovation loan or a one-time construction to close, as long as the seller can add in their closing costs, you could add those closing costs in it as long as the property is going to appraise. Don't forget that. Great selling tool. The customer doesn't have the money right now. It's a great selling tool. Get a seller's concession and they need a renovation loan. Just remember, you're being paid off of the contract price. So
What happens with?
you could put subject to CAFR. You got to put it in the listing, subject to CAFR, and you have to figure out how much the cost is going to be.
What's it called, subject to?
CAFR. You're looking at me, you know what CAFR is? CAFR is when you need a permit because you're building on the water.
Okay.
Yeah, you're either going to be putting out a pier, putting out a dock. Am I missing anything?
Not a lagoon.
On a waterway.
Main waterway. Yeah, they pay or something. They need to look at it.
Well, you've got riparian grants and riparian leases.
Yeah.
Well, rights and grants. It's rights and grants. Grant is you own it. Rights are you're borrowing it.
Now, does he technically need all the docks are in?
No.
They're just not playing.
You shouldn't need CAFR as long as the pilings are in the ground. Pilings are in the ground.
Frames there. And
Shouldn't need CAFR permits. You're not changing anything.
Right.
You're not, the funny part is I remember I was going for a CAFR permit because we wanted to move our boat slip like 3 feet. And we waited like 6 months and CAFR came back and said we couldn't move it because we would disrupt the aquatic life. Like,
That's kind of like
It's always a turtle.
the guy at the boat yard. Yeah.
well, because the rule of thumb is what goes to the sea cannot be replaced. So if it washed away and it went into the water,
Yeah.
it's water. That's why you see some houses have sandy beaches because they can't get CAFR permits because it's water. Who knows? I think they sit there and make up their own little funny rules. I think everybody makes up their own little funny rules.
When it comes to being on.
I know. Yeah. But it's there. You guys really need to go out and start getting land listings.
Right.
Really start
I
to.
agree.
Yeah.
Along with you and
I tell you, it's money. I can help you make it.
So that's why I was asking about the mods, because those lots are perfect for like a nice quick cake, raised cake or something,
Raised.
and now you have a house on the lot.
Well, you could put, you put your renderings up there. That's all you need to do. I'll help you with them. You just pick up the phone and call me. I'll help you with them. Did them for too many years. It's funny when my senior vice president of the company will call me and say, I have a construction question. Really? He said, you're the only one I think of it. No. Okay.
So there's no real. Landowner.
No, I missed that one completely.
When it comes to the contract with the builder that's going on sign, is that a contract to build it? So now you're on the contract with that builder. How does that work? I know said
You have two different contracts. You have the one for the land and you have a contract
with the
for
landowner.
the builder. Yeah. And in the contract with the builder, it specifically states if the builder's gonna be paying the commission to the landowner for the, for the sale of the land, because they made a mutual agreement, then it's gotta be in the contract.
That commission.
Yes, it is. Yes, it is. It's paid right up front. Because you have to get paid, and he has to get paid. So if you marry it up with a builder, you're gonna be making so much more of a commission. It
And
works.
they do all.
Yes.
See,
They're gonna go down and determine, like, in your case, you're gonna go down and determine how much, how much land coverage is there, how much can I put on there, what the plot plan's gonna be, what are the setbacks gonna be, how high can we go, is there tension wires, is there this, there, I mean, the whole 9 yards. And then you can determine how many square feet are gonna be on the property. And that's why I said you can also, you can also determine if it's gonna be, if it's gonna be a ranch, is it gonna be a cape, is it gonna be a 2-story, is it gonna be modular, is it gonna be raised? I mean, you could, there's a world of them that you could, figure out. The builder has to figure out what's gonna fit on that specific piece of property. Because if there's easements or right of ways and all sorts of legal things, or yeah, and a bulkheading can be included in a Reno at 225 or $50 a
when
foot.
I bought mine, it still needs roof. It's like what, 30? Yeah, it's 25, you know.
25, yeah, no,
I actually have a contract now with number 18.
really?
I'm just.
Yeah, he'll be weird, you'll be waiting.
He's waiting.
He's waiting to come to your house and say, I can't do this.
Yeah.
You're back.
I was talking to a friend of mine yesterday who said that down in South Jersey, in Williamstown, Paparone's building a senior development community. And they said they are losing money on every house they sell because of the cost of lumber.
Yeah.
They're building the houses, they've got contracts on the houses, and they're delivering them with losing money.
A lot of the builders are not walking the price either.
They're not
because of
what?
that,
Well,
Because
Down, a little more. They didn't plan on that before.
they're stuck. They're
You know,
stuck.
I was. You know, a lot of the builders giving me options. We're not gonna get to the state, but if you want out, that's fine. And then some people are getting out, but not knowing that they're taking something. If you get out of the contract, you're no longer in that contract. You have no money.
Yeah. I mean, builders are losing money. Not funny, but they are. Well, I think we're done.
thank you.
You're welcome.